Hey everybody, how are you? John Napolitano here with you. Happy Super Bowl Sunday to everybody out there. Not a huge football fan, but I'm definitely looking forward to some of the game and obviously the crazy commercials that might come during them. But I just wanted to, before all that festivities and stuff started, I'm going to do my analysis a little bit early this week. And one of the things that kind of one of the themes that I kind of developed during the beginning of this year, one of the things I thought was going to be the ongoing theme for this entire year is something called choppiness, which unfortunately a lot of you might have experienced already. Especially in the fall of last year as well as parts of December. However, the month of January was actually a pretty good month, so I expected choppiness all of 2023. I expected pretty much directionless trading, obviously going up, going down, but kind of at the end of the day, ending up not really up or down much of anywhere for the whole year. That was pretty much my assessment for the year. And obviously, my opinion doesn't mean anything. I'm just going based on what I see in front of me. That's really what I'm trying to say. And if you look at the heat map, which I have attached here in my video, you could kind of see what I mean by choppiness. Obviously, the energy sector is that bright green section off to the right. But if you look at the tech sector, it's a bit of a mess. The semiconductor sector is a bit of a mess. Healthcare had a good day, but it's been very weak overall. The financial sector, which is the bottom left-hand corner there, is obviously all over the place. You have the credit card companies up, but you have down. I'm sorry, but you have PayPal basically up. Then you have like some of the banks are mixed. So really overall, I think choppiness is starting to return back to the markets. And I think that's my theme for the overall, at least next couple of weeks. We have a big catalyst coming in this week, and it's basically going to be the CPI data, which is coming out on Tuesday. About a year ago or so, nobody paid any attention to the CPI data. It was just another data point. Now it seems to be a very important part of the decision-making process for both institutions as well as policymakers in general and everything else. So it's something we need to pay attention to. It seems to be one of the biggest market moving pieces of data that comes out lately. So that being said, it's coming out on Tuesday. The overall expectation is that year over year inflation is going to go from 6.5% down to 6.2%. That's pretty much what the anticipated CPI year over year number is. And that's off of 9%, which is pretty substantial. So if that continues, maybe if it does hit that target of 6.2%, markets might rebound off of a little bit of a pullback we had last week. So the question is, last week a pullback, or is last week part of a corrective action? You should not take day by day and make trading decisions, especially in the options market, based on a 1-day trading move or even a 2-day trading move. That's why I do a weekly analysis. I'll reevaluate on Wednesday or Thursday to see how things go, and I'll make adjustments as I go. That's really the key to good basket trading, good swing trading, positioning your portfolio for what's happening in front of you instead of what you think in your head might be happening. So take a step back, try to be a little bit objective, and just realize that we are now starting to get into a more choppy environment. So Tuesday, we'll see what happens. And I think that one thing to keep in mind, it's very easy to go from 9% to 6%. 9% is inflated inflation. Everybody's freaking out. People are raising their prices. Manufacturing companies are raising their prices, and it's getting passed on to the consumer. And the anticipation at the time when it was 9% was that the Fed does not have it under control. We don't know where this is going. And people just started raising their prices. That's why it shot from like 5% up to 9%. But now, once things seem somewhat, a little bit leveled off, that's the whole idea of it getting back to 6%. It's pretty easy to go from 9% to 6%. What is a lot more difficult, and I think, in my personal opinion, again, what I think is happening is the market is underestimating how difficult it is to go from 6.5% or so down to the target of 2 to 3%. The fact that CPI is going to go down in a straight line remains to be seen, and the market is not pricing in that uncertainty right now. I think that the market's pricing in a smooth decline of CPI over the next year, and the market is actually pricing in lowering rates at the end of the year, which I don't know about that. That doesn't sound like a good idea to me right now. So That is, again, that's my opinion. That's kind of what's also happening in front of me. So what's going to happen is if the market kind of does what I think it might do and have this kind of more positive approach to things, as the data starts turning a little bit sour, we might get some more choppiness, which will take us into the summer months, it'll take us into the fall months, and so on and so forth. But for the next couple of weeks, I did anticipate a pullback last week. I thought that the markets were overbought. All indicators were telling us that the markets were a little bit overbought. January was a very strong month for stocks, pretty much across the board. And maybe with the exception of energy, but energy has been pretty choppy. Energy is probably the most vulnerable sector. I've been talking about that on my Discord channel for the last several months. A 2-year rally, for it to go for a third year up, who knows? But there's better places to put your money. So that's kind of how I feel about energy. But other than that, the market's been pretty strong in January, and now we have our pullback. So let me just show you. I'm going to share my screen with you here a little bit. Let me just go down here real quick, and I will show you kind of what I'm seeing, and then what to do about it, basically. So, the S&P is in this kind of early stage uptrend since October, actually, off its October lows, and here's the pullback that we're talking about. So, does it go down to the 50-day moving average? That would be a nice, comfortable, convenient spot for that to kind of go. Although, if you look at the last 2 times, it's actually gone below that. So, do we get more of a pullback with Tuesday's CPI number down to here? That is very possible. What I am not anticipating is a move all the way down to here right away. I don't think that's going to happen unless there's really bad news. And there has to be really, really, really bad news for it to kind of get back to here. So again, it's a matter of even if we pull back, then where do we end up going up? Well, there's an area of resistance that's pretty tight right up here at around 430, which is a pretty nice even number, coincidentally enough, right? And I think this is kind of where we're going to be for a really, really long time. I think we might try to test up here. If we make this move higher, then you know what? We're probably going to run out of steam and probably test, old resistance becomes new support. And then maybe we'll test, these levels here, right? So this is kind of where I think this choppiness is going to end up. Now, choppiness is not good for investors because, basically investors don't like choppiness. The market, stocks don't move. Timing the market becomes a lot more challenging during choppy markets because it's just moving around. You get a lot of reversal days where the market gaps up and then all of a sudden, ends up at the lows. Or, it gaps down and the exact opposite happens. We close at our highs and you just get kind of off sides if you're trying to go long and short and trying to time the markets. So how does one survive a choppy market? Well, that's a very good question. Options traders, especially experienced ones, love choppy markets like this. I enjoy trading in markets like this because if I could try to define a certain range, like let's say here or let's say here, right? I could start putting together trades that kind of are in line with what the markets are telling me. And that's really the key to really effective trading. I've been talking about that over and over again. Option traders often make the mistake that, that you just got to pick a direction and hope for the best. That is not true. With options trades, you could put together, let me show you a trade I was looking at today on actually it's Boeing here. I'm looking at, this is almost a calendar spread. It's a diagonal spread, but it's a very tight one, right? So the risk graph looks pretty sharp here and it falls off a bit because really this is my sweet spot. I think Boeing is basically going to stay put for a little while. And the reason why is because the market is choppy, like I said. And basically, let me show you what I'm talking about here. I'm going to go into here and I'm going to show you what Boeing looks like really quickly. Basically, it's been kind of going sideways for a while. And if the market goes sideways, look at how sideways Boeing has been at that 210, 212 area. Why wouldn't that continue in a choppy environment? So a stock trader would be very frustrated with the stock that I'm showing you right now because it's doing nothing. But as an option trader, that's fantastic. I could put together a calendar spread. I could put together a really tight diagonal spread. I could even do a vertical spread and kind of set it and forget it. These are all strategies you'll learn with me if you spend time with me. These are all strategies you need to know as an effective options trader, when to use them, how to use them, and why to use them. So again, I hope everybody's careful this week. I just wanted to give you my 2 cents on the markets. Choppiness is the theme. And I think in order to trade the markets effectively, you need to have a plan. Spend some time with me. You will have that plan for sure. So happy trading, everybody. Have a wonderful, wonderful Super Bowl Sunday, whoever you're rooting for. I'm just rooting for the commercials to be funny, to be honest with you, because they've been kind of lame the last 2 years. But basically, I'm going to enjoy myself today. So I hope you do the same. All right. Enjoy, everybody. I'll talk to you guys soon. Take care.